I've spent my entire life studying the market, and let me tell you, it is never wrong. The people are wrong. Human emotion drives prices: fear, greed, hope, impatience, and these emotions repeat themselves over and over. My job as a trader has always been to read the crowd, to see what others cannot. I learned early that the market is a reflection of human nature, and human nature never changes. When a trend begins, it often starts quietly. Most traders ignore it at first. Then it gathers strength, and suddenly everyone notices. If you fight the trend, you fight the market itself, and that is a losing battle. I follow the trend. I let it tell me where to go. I never try to guess or predict, I react. That is where the money is. I also watch the extremes. When everyone is euphoric, I am cautious. When everyone panics, I see opportunity. Discipline is everything. Control your emotions. Sit quietly. Wait for the market to reveal its intentions. Those who cannot do this will lose, no matter how smart they think they are. Patience is more powerful than intelligence. Profits come to those who wait, not those who chase. You must be able to see through the noise, stay detached, and react only when the market gives a clear signal. It is not easy, but mastering your own mind is the greatest advantage you can have. I've learned that reading the tape is not enough. Understanding the people behind the tape is what separates the winners from the losers. Observe, wait, act decisively, and never let emotion dictate your trades. That is how fortunes are made in the market. I've often said it was never my thinking that made the big money. It was always my sitting. Timing is everything. You can have the best analysis in the world, but if you act too early, you will be destroyed. You must wait for the market to show you the proper moment. Patience is not inactivity, it is active observation. You watch, you study, and you prepare. Most traders lose because they cannot wait. They enter positions out of boredom, hope, or fear of missing out. That is a recipe for disaster. The market does not reward action, it rewards accuracy. I wait for confirmation. I watch price action. I wait for a trend to establish itself. Then, and only then, do I enter. I also know when not to trade. Choppy, uncertain markets are traps for the impatient. Sitting on the sidelines is not a failure, it is strategy. Once in a trade, patience is equally important. Do not cut winners too early. Let the trend work for you. You will face minor pullbacks and doubts. But if the trend remains intact, stay in. That is where true profits lie. Trading is a waiting game, and patience is the weapon of the disciplined trader. The market moves on its own timeline, not yours. Respect that, and the rewards can be great. Cutting losses fast, and the discipline of risk management. If there is one rule that has saved me more than any other, it is this: cut losses quickly. When I am wrong, I admit it immediately. I do not hope, I do not bargain, I exit. Losses are part of the game. Refusing to accept them is what destroys traders. I set strict stop-loss points. They are non-negotiable. Pride has no place in trading. Do not let ego dictate your decisions. Position sizing is key. Risk only what you can afford to lose emotionally and financially. Never average down. When a stock moves against you, it is telling you something. Respect the message. Risk management is not a technique. It is survival. Protect your capital above all else. A trader with discipline, small losses, and controlled risk can endure any market storm. Without this, even the smartest strategies fail. The greatest fortunes are made by riding big trends, not by taking small profits. Most traders cut winners too early. They fear losing small gains, and in doing so, they abandon the real money. Major trends come rarely, but when they do, they are powerful. Patience is key. Watch the trend. Add to positions only when confirmed. Ignore minor pullbacks. Let profits run. Emotional neutrality is essential. Do not fall in love with a stock or an idea. Exit when the trend shows exhaustion. Courage is required not only to enter but to stay in a winning trade. Traders who abandon their positions too early never see the full potential of the market. Never take tips or rumors. They destroy your judgment. The market speaks clearly if you listen. Price action is the only real signal. Acting on others' advice is emotional trading. A disciplined trader thinks independently. Avoid newspapers, chatter, and noise. Focus. Observe. Act on evidence, not opinion. Trading is solitary. Profits and losses are yours. Those who follow the crowd suffer its fate. Independent thinking wins. A trading system is your compass. It begins with rules, entry, exit, risk, position sizing, and trend identification. Follow the trend, wait for confirmation, control risk, let profits run. Obey your system with discipline. Emotional control is critical. A system reflects your understanding of the market and yourself. Follow it rigorously. This is how a trader survives and thrives. Without it, you are lost to impulse, fear, and greed. I have learned throughout my career that observation is the most powerful tool a trader can possess. You cannot make wise decisions without first understanding the market's mood, its rhythm, and its behavior. The tape is more than numbers. It tells a story. Every tick, every volume spike, every sudden reversal is a message to those who watch carefully. Patience is essential in observation. Do not rush to act at the first sign of movement. Instead, learn to read pate. RNs interpret signals and anticipate the intentions of the crowd. The market speaks to those who listen. Emotional traders who act on impulse ignore these lessons and suffer the consequences. I have always emphasized that observation is not passive. It is active, deliberate, and continuous. Take notes. Track behavior. Compare what you see with past trends. The information you gather becomes your edge. Knowledge without application is useless. Observation without understanding is worse. Most traders fail because they overlook subtle clues that indicate major moves. Volume precedes price. A stock that hesitates near support levels may be preparing for a breakout. Watching carefully allows you to align with the trend before the majority recognizes it. The discipline of observation also teaches humility. You will not always predict correctly, and the market will humble you. Accept this and adjust. Let observation guide your entries and exits, and you will trade with confidence instead of fear. In conclusion, the trader who masters observation masters the market. Watch patiently, interpret wisely, and act decisively. Let the market tell you the story, and follow it without ego or emotion. A clear understanding of whether you are speculating or investing is crucial to survival. Speculation is about timing, understanding crowd psychology, and reacting quickly to market behavior. Investment is about fundamentals, patience, and long-term value. Confusing the two is a recipe for disaster. I have always positioned myself as a speculator. I do not buy based on hope or news alone. I watch price action and crowd behavior. Every trade is a calculated response, not a wish. This mindset allows me to act decisively when opportunities present themselves. Speculators must understand that risk is inherent. It cannot be avoided, only managed. You cannot profit without embracing uncertain. Thank you, but you can control losses through discipline. Investors, on the other hand, accept volatility as part of long-term growth. Mixing these approaches leads to poor decisions. Knowing your game also means sizing positions appropriately. A speculator risks a small portion of capital on high-probability moves, while an investor allocates based on long-term conviction. Recognize your objective, act according to it, and do not waver. Understanding the distinction between speculation and investment allows a trader to develop clarity and confidence. Never operate in ambiguity. Choose your game, master it, and let it guide every decision you make. The most dangerous opponent a trader faces is himself. Fear and greed destroy more fortunes than any market fluctuation ever could. Emotional control is not optional. It is essential for survival and success. I have learned to treat every trade as a calculated decision, not a gamble. I never allow fear to force premature exits, nor do I let greed extend a position beyond reason. Discipline is the weapon that allows you to survive long enough to reap the rewards of the market. Emotional control requires self-awareness. You must understand your triggers, recognize patterns of impulsive behavior, and build habits that counter them. A trader who knows himself will respond to the market rationally, not reactively. Many traders believe skill alone determines success. It does not. Skill without emotional control leads to repeated mistakes and catastrophic losses. The trader who masters his emotions has a built-in advantage that no system or analysis can replace. Finally, remember that the market tests every trader's temperament. Only those who maintain composure during extreme volatility will survive and prosper. Emotional discipline turns ordinary traders into great ones. The market evolves, technologies change, strategies adapt. But human nature remains constant. A trader must never stop learning. Each trade, whether a success or a failure, contains lessons if you are willing to study them. I have always reviewed my trades, analyzed mistakes, and refined my approach. Complacency is the enemy of progress. Even after decades in the market, I discovered new insights every year. The trader who believes he knows everything is doomed to fail. Continuous learning also means adapting to new tools and methods. Charts, indicators, and trading systems evolve. Understanding them can provide an edge, but only when combined with disciplined application and psychological mastery. Seek mentorship, read diligently, observe others, and most importantly, study yourself. Your habits, biases, and decisions are the core of your trading success. Improvement comes from reflection and disciplined adjustment. In conclusion, the trader who commits to lifelong learning develops resilience, adaptability, and insight. These qualities compound over time, turning small advantages into lasting success in the unpredictable world of speculation.